Speaking of Chinese tech stocks, Alibaba is a stock that I've talked about on the main channel quite a few times now. And I talked about it right when Jack Ma disappeared and it was at $220 a share. I told you guys I was buying it. Now the stock sits around $240 a share, and this is in my opinion, a really undervalued company. Obviously, investing in a Chinese stock, there's always the issue with the Chinese government. You never know what can happen there. So that is the risk, all of the regulations and what could happen with the Chinese government. But the market cap for Alibaba is right around $644 billion, and they generate revenues that are very, very high in terms of, you could compare them to companies like Amazon. The company reported $221 billion in revenue in Q3 of 2021. That was in US dollars, but still, they are doing some pretty major numbers. And really, you should be comparing them to a company like Amazon. Amazon has a market cap of $2 trillion. And when looking at Alibaba moving down the road, in my opinion, there's really no downside at the current stock price from their Alibaba cloud business, which is a business they are investing nearly $30 billion into over the next 3 years because of the massive potential it has, to their e-commerce business, which has been growing exponentially. This company has a lot of potential. In my opinion, I don't think there's any downside. Looking in the last year, the stock at one point was over $300. It was at about $330 a share. Now it's down to $238. Every single analyst who's looking at this stock right now is projecting a minimum of $290 per share at the end of the year. And that implies, right now it's only at $230 a share. So that implies about a 20-25% upside from where it is right now. That's the lowest analyst rating. The average analyst price target is $325, so that implies about a 45% gain. And there is a lot to like about Alibaba. Between all their strong fundamentals, they have a lot of growth coming. And also, one of the big pieces of controversy was with one of their companies called Ant Investments. It was supposed to IPO earlier, I believe this year, or if not this year in 2020. There's a lot of drama with regulators in China, but now they've been given the go-ahead to go ahead and IPO, so they're going to still IPO, and that's going to bring a lot of attention back, a lot of good news for Alibaba, so that will be something that also drives the stock price up. I don't think you could go wrong with the company. It is a strong business with a lot of potential, and they're integrated in so many things in China. The one risk is with the Chinese government, which is really the risk of investing in any Chinese company. But when you're looking at e-commerce, JD.com, PDD, all of these stocks nearly doubled or tripled over the last year. Alibaba has not had the same luck simply because of some of these things going on in China. But once Ant IPOs, once they get some good traction, I think we'll easily see this continue to get over that $320 per share range, back to where it was before.